Good morning, investors. You are now on KleverStock with me, Ainun Jaria, serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. Bursa Malaysia opened higher on Monday today, lifted by stronger regional markets, but later powered gains as mild profit-taking hit select heavyweights, analysts said. At 9:10 a.m., the FPM KLCI slipped 1.34 points to 1,633.72, down from Friday's 1,635.06, after opening 1.08 points higher at 1,636.14. The market breadth remained positive, with 200 gainers outnumbering 177 decliners. Meanwhile, 367 counters were unchanged, 1,820 untraded, and 7 suspended. Turnover stood at 258.73 million units, valued at 104.81 million ringgit. Moving on to local currency updates. The ringgit opened lower against US dollar as traders anticipated range-bound trading ahead of the tabling of Budget 2026, with attention focused on the government's fiscal deficit targets to be unveiled later this week. At 8:08 a.m., the ringgit eased to 4.2110 or 4.2180 against the greenback from last Friday's close of 4.2055 or 4.2125. Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzal Abdul Rashid said the US dollar ringgit exchange rate could hover between 4 ringgit and 21 cents and 4 ringgit and 22 cents today, as markets stay cautious before Friday's budget announcement. He said all eyes are on Budget 2026 this week. We expect the government to maintain fiscal discipline with a further narrowing of the budget deficit next year. Muhammad Afzal said the budget allocation is likely to remain stable, supporting domestic demand through both consumption and investment. He added that sentiment should be broadly positive for the ringgit, as the government remains committed to fiscal prudence while balancing the need to spur economic growth. At the early session, the ringgit traded higher against a basket of major currencies. It rose versus the euro to 4.9336 or 4.9418, inched up against the British pound to 5.6571 or 5.6665, and appreciated against the Japanese yen to 2.8158 or 2.8206. The local note, however, was mostly lower against ASEAN currencies. It weakened versus the Thai baht to 13.0005 or 13.0282, slipped against the Indonesian rupiah to 254.2 or 254.7, and eased versus the Philippine peso to 7.27 or 7.29. However, it strengthened against Singapore dollar to 3.2598 or 3.2657. Continuing with some local economy updates. Prime Minister Datuk Seri Anwar Ibrahim stresses that financial literacy must be made a core element of nation building to ensure that the economic growth is felt by all Malaysians and not only by the elite. Reflecting on the 1990s when he served as finance minister, Anwar said his experience then showed how limited public understanding of finance and investment was, despite a seemingly sophisticated system at the time. He said, "When I was finance minister, a study by the London Stock Exchange found that financial literacy levels were extremely low. Many viewed the stock market as a casino, making decisions without knowledge, figures or data. This is why people were so easily deceived." Anwar was speaking at the launch of the National Financial Literacy Strategy 2026-2030 and Financial Literacy Month 2025 at Sasana Kijang on Saturday. It was also attended by Education Minister Fadlina Sidek, Bank Negara Malaysia Governor Datuk Seri Abdul Rashid Ghaffur, and Securities Commission Chairman Datuk Muhammad Faiz Azmi. While Malaysia's financial system is now stronger and more reliable, Anwar said the key challenge is to ensure financial understanding reaches all groups, including rural communities and lower-income households. He said, "We do not want only a small group to benefit. Financial institutions must extend their role into villages and rural areas to share knowledge and understanding with the people. He added that critical thinking, which begins with financial literacy, is crucial for building a mature society and avoiding conflicts driven by ignorance of race, religion, and regional differences. He said a nation may develop, but without deep understanding, problems will arise. Knowledge of history, culture, and principles of unity cannot be shallow, because such ignorance is what drives division. Anwar also warned that Malaysians remain vulnerable to get rich quick schemes and financial scams, noting that even highly educated individuals fall victim. He added there are many cases of losses amounting to hundreds of thousands of ringgit, and across ASEAN the figures runs into billions. Some may be literate but short-sighted. They have basic knowledge but not in-depth understanding. He urged financial institutions to shoulder greater social responsibility by engaging schools, mosques, and local communities to deliver practical financial education. He then said, not everything can be left to schools as the curriculum is already packed. Banks with branches nationwide should step forward to educate our children about trust, integrity, and financial risk. Strengthening financial literacy goes hand in hand with the nation's aspiration to fight corruption and nurture a generation that is knowledgeable, trustworthy, and able to manage resources wisely. If we truly want Malaysia to succeed, we must work harder to ensure that no community is left behind. With the resources and energy we have, I am confident we can achieve this. And now moving on to corporate news update. Malaysia's healthcare sector is expected to remain on a steady long-term growth path, driven by the rising prevalence of non-communicable diseases, NCDs, and an aging population, according to CIMB Security Senjan Berhad. The research firm said the ongoing and planned expansion of private hospitals could be a key growth catalyst, with demand supported by structural shifts in demographics and healthcare needs. CIMB Securities projects that private hospital bed capacity will expand at a compound annual growth rate of about 4 to 5% between 2023 and 2028, underpinned by multiple new projects. This comes as Malaysia's hospital bed ratio of 2.0 per 1,000 people remains below the 2.5 benchmark in developed markets. Added within our coverage, the KPJ Healthcare Berhad and IHH Healthcare Berhad are aiming to expand bed capacity by 53% and 43%, respectively, bringing total capacity to 6,000 and 4,978 beds by 2029 and 2028, thereby positioning them well to capture incremental demand. Furthermore, CIMB Security said Malaysia is working to establish itself as a premier medical tourism hub under Visit Malaysia 2026. In 2024, Malaysia recorded 1.6 million healthcare travellers, a 14% year-on-year increase, with the majority coming from Indonesia, which accounted for 70 to 80% of healthcare tourism HT revenue. The government is targeting 4.3 million and 4.7 million Indonesian arrivals in 2025 and 2026 respectively, which should further boost demand for healthcare tourism. CIMB Securities noted that HT revenue contributed 6% and 12% of KPJ's and IHH Malaysia's revenue in the second quarter of 2025, respectively, supported by partnerships with foreign referral centers and flagship medical centers. The firm expects VM 2026 to accelerate the contribution of HT to private hospital operators' earnings, reinforcing long-term sector growth. Nevertheless, CIMB Securities said manpower shortages and regulatory developments remain the key challenges for Malaysia's healthcare sector in the near term. It said, while the Ministry of Health (MOH) continues to highlight critical nursing shortages in the public sector, we note that this issue is less acute for private operators such as IHH and KPJ, which are better equipped to attract and retain talent through competitive pay, digitalization initiatives and modern facilities. On regulation, the rollout for the Diagnosis-Related Group DRG framework has been postponed to 2027. The initial phase is expected to cover outpatient cases, which contribute less to revenue and margins, suggesting limited near-term financial impact on private hospitals under our coverage. Overall, CIM Securities has maintained an overweight rating on the healthcare sector with a buy call on IHH as its preferred pick within coverage. The firm said it likes IHH for its diversified regional asset base, which helps insulate it from regulatory risk in Malaysia, its proven execution track record, its premium market positioning, and its exposure to an affluent clientele that supports earnings resiliency. In contrast, firm has maintained a hold on KPJ as its predominantly domestic exposure leaves it more vulnerable to payer pressure and local regulatory developments. And finally, wrapping up, we have major corporate developments and deals across Malaysia. IHH Healthcare Berhad has obtained approval from India's stock exchange regulator to proceed with its long-delayed open offer with a 26% stake each in Fortis Healthcare Ltd and Malar Hospitals Ltd. Maxis Berhad has accepted an offer for the MCMC for a 2 × 10 MHz block of 2,100 MHz spectrum with an upfront payment of 100 million ringgit and cumulative annual payments totaling 300 million ringgit over the assignment period. Malakoff Corp Berhad via 70% owned Malakoff Evergreen Sudan Berhad has signed a 30-year PPA with Syarikat Sesco Berhad to develop and operate a 100 megawatt solar PV plant in Bintulu, Sarawak. NextG Berhad has secured a 732.7 million ringgit 6-year contract from the Home Ministry to supply Malaysia's next generation identity cards, including MyCard, MyTentera, and MyPoka from June 2026 to May 2032. And last but not least, Sapura Industrial Berhad has signed an MOU with Shanghai Auto Electric Drive Co. Ltd to localize manufacturing and assembly of electric drive systems in Malaysia. Now that's a wrap for Morning Bell Updates with me, Ainun Jaria on KleverStock. Thank you for choosing us, investors. Stay tuned for the next live coming soon.